Are you kidding me? There's another international health emergency. It is way too early for the sequel of 2020. But unfortunately, recently, the Director General of the World Health Organization declared monkeypox, which is now known as Mpox, an international health emergency. That's become a public health emergency. And fortunately, countries are responding, but it's kind of staggering to look at these headlines, right? Singapore ramps up Mpox screenings at airports, border checkpoints amid global outbreak. Asia ramps up border controls, tests, and vaccines as new clade of Mpox spreads. Mpox outbreak 2024, 5 countries tighten border screenings as the new variant spreads. Bloomberg reports Pakistan's begins screening all travelers for Mpox virus. And then the Business Standard talks about the Mpox outbreak and what travelers need to know. We're going to get to that in a minute, but first I want to lay out the video. So what's going on here? And then importantly, what do we need to do to protect ourselves, just briefly? And then the third thing is, could it have an impact on the United States economy and the United States stock market? So let's jump in. What is Mpox? This is from the Business Standard. Mpox, also known as monkeypox, is an infectious disease caused by the monkeypox virus. It manifests, unfortunately, with a painful rash, swollen lymph nodes, and fevers. The virus spreads through close contact with infected people or animals, with transmission possible by skin lesions, direct skin-to-skin contact, and proximity to an infected person. And then it goes on, this article is really about for travelers, but it talks about Indonesia, it talks about China, it talks about South Africa and Kenya, and it goes on and has a couple other countries, including India, in there. So visit that article if you want to know more. But essentially, we're in the early stages of this virus spreading, and hopefully we've learned a ton from the COVID virus, and we can contain this so it doesn't get out of control like, unfortunately, COVID did. But now, importantly, do you and I need to be worried? I'm not a healthcare professional. I don't know. I think we're going to be okay, but keep your eyes on the news, inform yourself. I'm sure there'll be no shortage of news if this gets worse. But what about the U.S. economy, and what about the stock market? Do we need to worry about that? And initially you might think, well, Azul, why would we have to worry about that? But, for instance, China is taking measures, and there's a lot of container ships that go both into China and out of China. And part of that is the time, the effort it takes to sanitize those things and to protect that from becoming a mode of transmission. So it could slow things down. But right now, is it a big factor on the U.S. economy? Not at all. But, it's not at all a factor now, but it's not a factor until it becomes a factor, right? So this is what I call a black swan event, right? COVID was a black swan event. The great financial crisis was a black swan event. And these black swan events are things that aren't supposed to happen often. They're like once in 1,000 years. But you know what? These black swan events have a way of happening much sooner than any of us think that they're going to happen. A black swan event would be like the dot-com bubble busting. A black swan event would be things like the great financial crisis. Certainly COVID would be a black swan event. And, the dot-com bubble bursting, that was at the end of the 90s, the early 2000s. Then 8 years later, we had the great financial crisis. Then 12 years after that, we had COVID. So the important thing and how this ties into what you should be doing with your stocks and your outlook on the economy is you should be cognizant of the point that black swan events can happen and bad things can happen. And you want to make sure that you have your asset allocation right, because unfortunately, when these things happen, the stock market corrects, and it corrects very, very quickly. Look at the start of COVID. Within 4 weeks, the stock market had dropped, the S&P 500 had dropped by 1/3. Within 4 weeks, that was the fastest drop in the history of the U.S. stock market. So yes, there's the old adage that the stock market takes the escalator up and unfortunately takes the elevator down, which means it takes a while for the stock prices to go up, but they can go down very quickly. So if we wait until black swan events happen, more often than not, it's too late, right? At that point, we have to ride it out. And by its very nature, black swan events are events that we cannot predict ahead of time. So none of us are going to be able to predict it. And forget about black swan events, even things that are recurring and normal, and I would argue even healthy, unfortunately, painful, but healthy, things like a recession are almost impossible to forecast. So rather than try to forecast it and try to predict when it's going to happen, I think most of us are much better off to have the right asset allocation, the right amount of stocks, the right amount of bonds, so that we can weather that storm. And importantly, enough cash. So if you're working, have an emergency fund of at least 3 to 6 months, where if God forbid you were to lose your job, that you have time to find another job before bills start piling up and you have the additional pressure of thinking about how you're going to pay for those bills. So that's one. If you're working. If you're retired, yes, you don't have to have as big of an emergency fund because you don't have to worry about losing your job. You're now retired. But you too can become a forced seller in a down market really by two different ways. The first one is you need to take money out of your retirement accounts to fund your living expenses. And if you have to take money out of stocks to fund your living expenses, if the market's down, by definition, you become a forced seller in a down market. You don't have the luxury of waiting 2, 3, 4 years for the stock market to recover. So that's one way. And then the other way is just and frankly, people working suffer from this as well, is just the mental pain of seeing your stock portfolio go down. So what do we do to protect ourselves? I already talked about people that are working. For people that are retired, what I want you to think about doing is have a couple years, at least a year, preferably a couple years, worth of living expenses that are not exposed to the stock market and things that are more stable, that if the stock market goes down, you can maybe sell short duration, high quality bonds in order to fund your living expense, or take money out of the bank. As I record this, the stock market's close to all-time highs. So the time to build up an account like that, it's a heck of a lot easier to do that, to sell stocks, to build up an account like that when the stock market's doing well and it's at an all-time high, versus after the stock market has fallen 20, 30, 40%. Same thing for folks that are working. It's a lot easier to build that emergency fund up when the stock market's at all-time high. So if you don't have an emergency fund, either because you're worried about a job loss or unexpected expenses, or because you're retired and you don't want to be a forced seller in a down market, think about working with a professional. Nothing I'm sharing with you is financial advice. I don't know your situation, but most of us can benefit from having an emergency fund like this. It's really all about making good decisions, making great decisions. And that's why I made this video up here. It's called Why Retiring at 65 Might Be a Big Mistake. For many of us, we might want to retire before 65 because unfortunately, we're likely going to lose our health sooner than what we think. The average 60-year-old, unfortunately, has less than 1,000 weeks of healthy active time remaining. So retiring at 65, why that might be a big mistake. Thanks for watching this video, and I'll see you in the next one.